Okay. Hello, everyone. Welcome to a new episode of the Launchpad Roundtable. Today, we're talking Launchpads with two OGs in the Launchpad space. We have Kyle Chassé from Paid Network Master Ventures, one of the OGs in the Launchpad space, and Prakash, CEO and co-founder of Enjinstarter, also one of the OGs, another Launchpad that's been around since 2021. Welcome, both of you. Thanks for being here.
Thank you for having me. Pleasure.
It's a pleasure.
Maybe to get started, before we really dive deep into launchpads, maybe we should have a look at what's the market and how is the market currently, and are launchpads hot right now, or what's the status of launchpads currently? Kyle, what's your sentiment around that?
I've kind of advised all the projects that want to launch with us, and our executive team have paid to kind of really focus around October. And I think that we might do one or two in September, but I I, I just want us to focus on October, and from that point moving forward. And that goes back to your original question of like, where are we in the market? As I talk about on my YouTube channel a lot, my kind of expectation was that we would see Bitcoin return kind of toward its old all-time high 4 to 6 weeks after ETH ETF starts trading. So if I'm right, we have 2 weeks left still. So we'll see. I mean, it doesn't feel like it's going to do that now, but usually when it doesn't feel like things are going to happen, that's usually when it does. And that would just kind of line up with the timing. We did have, like, markets hate uncertainty, and we're dealing with a lot of uncertainty, over the past month or two. So, grayscale overhang, Mount Gox distributions, German government selling. Now that's done. We don't know if the US government's selling the Silk Road Bitcoin. There's just a lot of like uncertainties right now, right? And then you have kind of macro recession, the Japanese yen carry trade unwinding, and like all this kind of stuff that is really kind of creating a lot of uncertainty. However, like all these macro influences on the greater economy, and the fact that the jobs reports coming in worse than expected are creating a lot of pressure for the Fed to cut rates, right? So we can start to see like the odds on poly markets and things like that of the Fed cutting rates in September are looking very good. I think that we could see up to like a 50 basis points rate cut in September, which would be very, very bullish. Then leading into, and then that we should also see, like, this kind of my timeline is expecting within the next 2 weeks, hopefully full distribution of Mt. Gox. It also seems like Mt. Gox creditors or receivers aren't dumping their Bitcoin like smart. Like they're actually just maybe they're selling a little bit to pay their bills or something, but like,
The current retail market seems to have woken up to know that they have been exit liquidity. For the VCs, everyone is looking for some form of a fair launch model, and a lot of liquidity is going into meme coins and meme token projects, only because the retail investors feel, yes, I'm taking a punt. I am deploying capital. It's, high risk, high reward kind of ratio. And that's really taking away a lot of the liquidity that we usually see from a launchpad or post launchpad perspective. And I think these are some of the things that really keep me awake at night today.
You touched on some interesting points, the liquidity of the retail investors, but also like the hype and what people are expecting, and the performance of IDOs as well. And maybe I'm gonna point this question to Kyle. Back in the days in 2021, we could almost guarantee that an IDO would give certain returns, and we were talking about 10x, 20x, 50x, sometimes 100x or more. But we don't really see these returns this year in 2024, or at least I have not seen them. Can you tell us a bit more what you think, why you think these returns are not here? Is that mainly because of retail is not here yet, or are there other factors involved there as well?
for my community and pay network, I'm trying to prime them to never expect these kind of returns. And that's the antithesis of like the 2021 version of paid, right? Like, and I just think that that kind, like, when paid launched, we did 125x from the public sale, 600x from seed round, and everyone's like high fiving. Yeah, good job. Wow, cool. You think you're the shit, right? But you have 1% of your supply circulating or something, right? And so you have, I think we had like $1 billion from investors in unrealized profit because of those gains. So what do you think happens when those unlocks happen, right? People are going to take profit. They're going to take profit aggressively, and it's not sustainable, right? And so I'm, I would like to, when I speak to founders right now, I'm trying to get them and the community to look at like really high quality projects with better distribution and healthier charts. We like one of I think the last project that we launched on Paid Network in June was Commonwealth, right? And it raised $5.2 million, had like 4,500 people participate in it, very broad distribution, a fairly reasonable FDV, and a fairly high circulating supply when it launched. And even though today a lot of the projects that launch on Binance and all that stuff are down 78%, 80%. Commonwealth is at the same price it launched at, right? When it's like stable. And I think that when but it did go up a little bit and then it went down, right? Like it dropped below. And now it's kind of just hovering right around the public sale price. And I think that's really healthy. And what it allows people to do is it allows people who don't who never intended to become an investor. They wanted to become a flipper, right? And that's what I noticed on Paid Network from last bull run is that we were promoting and our audience became flippers, right? They didn't care what the name of the project was. They didn't care who the founders were. And we're guilty. I'm super guilty of my due diligence bar was down here, right? Like everything was pumping, like you said, Rick. Like it was like everything was making money. So why would we do due diligence? It was like it was like not something I'm proud of, but everything was pumping, right? And so the whole methodology was restrict supply, slow circulating supply, high pump, vanity metrics. It looks good, people perceive that to be a sign of quality, but it's unsustainable. And you see that looking back in the charts, right? And so that's not realistic, right? And I'm not going for Paid Network, we're not going after the existing crypto community, right? These people have become too spoiled, too greedy, too addicted to dopamine from meme coin trading. What I want to do is I want to target the next 10, 20, 30, 40, 50, 100 million people who are going to come into crypto over the next 12 to 16, 18 months, right? And they're not exposed to this kind of degeneracy and these kind of like gains. And then they're not seeing the stories of like the random anonymous Twitter account who claims to have made 1,000x on their meme coin trade, which we have no proof of other than a screenshot that they could have fucking definitely, doctored themselves because no one ever shares, on-chain transactions, right? So I would like to see more similar types of launches to ICO days where projects are selling 20, 30% of their supply, for fair valuations. Like just because you raised from Coinbase Ventures and Polychain and Sequoia doesn't mean that you have to go raise at a $500 billion valuation or $500 million valuation or $2 billion valuation. Like Ethereum, its ICO was an effective 24 or $26 million valuation. Solana was like, $26 million valuation, whatever. Like Cardano sub 40, sub 50, something like that. Like Chainlink, same, like 30 something $1 million valuation. These are the best protocols in the world today, all launching their public sales under a $50 million valuation, far less than a $50 million valuation. Right. And now we have these shitty dApps coming along, launching at $80 million valuations, completely unreasonable. And there's no need for it. Just because you can do it doesn't mean you should do it. Right. Public sales are supposed to be about growing a community. That's the purpose of it. Right. And it should be something where you take time to educate your community and about the project that they're investing into, not that they're using for to churn over, right? This is like I want Pay Network to be looked at as an investment platform where people come and look for a place to put capital into good quality projects that is their moon back, right? And so, we're slowing down. We're not going to be doing 5 or 6 project launches a week. We're going to do between 1 and 4 a month, high quality projects, great founders, and fair valuations, larger public sales, more distribution, less expectations of multiples. And we don't have these staking tiers where people need to stake tokens to get into, right? We built a different type of economic model where anyone can participate. You do pay a fee if you get allocation, but it's the same thing if you invest into a fund or a model like Ape Terminal or something, except for the fee that's charged doesn't go back to us as founders. It goes back to the paid token and its economy, right? So it runs in a completely decentralized, open, public, circular token economy. So yeah, like don't get me wrong, it's fun when you see 100 X's and you get to participate in that. It's just not what we're going for.
I was hoping you would touch on a valuation side, and you did, and I'm happy with that. I had one of the hot takes prepared, and you touched on that as well, saying that the valuations that public currently buys at are is way too high, or at many projects expecting or giving themselves this valuation while they're actually not really worth that. Can we state that launchpads became exit liquidity for VCs in the current stage, or is that a bridge too far?
Well, for me, I'm not sure if that's like on high quality projects, the good VC, like if you have a high quality project with VCs that are actually investors, like the good money that support the product, like they usually have 12-month cliffs. So I don't know in these situations if you could say that that uses exit liquidity.
Yeah.
But I do think though that like I'm actually talking to a lot of founders and saying like, hey, I know your last round was at an $80 million valuation, but would you consider doing a public sale at like a 50 million, a 60 million? I know your investors won't be happy, but they're going to be smaller checks. And these are the guys, most of these people are going to be doing actual work. Your VCs, they're not going to be doing work. They're not going to go out and be your guerrilla marketing army. They're not going to go on live streams and post your cash tag and make memes and gifts and sticker packs for you. These people are going to, and they're just little retailers, give them like a good deal. And, cause like I always tell people this, like if you're at a conference or an event, a crypto event, and you meet somebody and let's say that you're like, you happen to bring up like Chainlink or you happen to bring up like Ethereum or Solana or Cardano, like if that person participated in that ICO, they will interrupt you in your conversation and be like, I was in the ICO, you know? And everyone does it, right? It's an emotional thing where they felt proud that they made it. They took the decision to invest their capital into the ICO. They trusted that project. They got in a good valuation and it made them a lot of money. And now they have an emotional bias toward that project. They're a loyal community member. You hardly see any of that from 2021, right? There's like almost no Link Marines, XRP Army, Solana. Like those people didn't exist in 2020. So like, let's bring that back. How do you do that? You got to give the retail, the people, a fair opportunity and to come in at a good, fair valuation, right? Something that they can grow with. And who cares if like you should be happy if they make a little bit of money, right? Don't set the bar so high that you can only come down from there. Set the bar lower so you can grow up and everyone goes with you, you know? And this is the conversation I'm having to have. And the earlier I can get to founders, meaning like the earlier in their rounds, the more this resonates with them, the more they're willing to kind of work with me on this. The later I get, the more that they talk to market makers, the more they talk to KOLs, the more they talk to exchanges, the more difficult it is for them to kind of unwind because everyone's so programmed in for that hype at the launch. The launch is so important. The launch defines the launch doesn't define your fucking project, right? Like you hitting your milestones, you delivering, you generating revenue, you continuing to build product and be useful, that defines your future. The public sale is just an opportunity to build a community and raise some money from people other than VCs, right? That doesn't define your success as a project. It's merely it's merely a step in the stage of where you're going. Basically, it's actually pregame. It's before the start line because after that is when you really have to prove yourself.
Yeah, that's a great point, and especially of like doing the public round lower than a private round, because like you want your public investors or your public community, which is probably only 1, 2, or 3% of the whole tokenomics anyway, to be your advocates, to be talking about you, to be like having this emotional connection, and you don't want those public investors to be underwater straight away. I think that's the best way to bond your community is if you're actually in the green on your investment. Godly or Prakash, you have anything here to add?
No, I really agree with Kyle. I think we need to bring what the launchpad, serves back into the picture. And really is about distribution, right? It's really about kind of giving the man on the street an opportunity to make money and becoming brand ambassadors, kind of promoting your project on a much more longer term basis as compared to, kind of just churning projects. And, they don't have that emotional attachment to it. And I think that's really what we, from a launchpad perspective, are starting to look at. Once again, I agree with Carl. I think, we need to look at the new entrants into the space. And that's why, for us, we're always looking at emerging markets because there's something that's always very close to us. We can reach out to some of these guys who are coming into the space for the first time, or, in their early journey into the digital asset or crypto space, and we help them make money. They're going to be loyal with you. They're going to spread the word. And we really kind of created a whole lot of impact with that. And I think that's really very important for us to kind of realign ourselves back to the very reason why we are here, and to start focusing on attracting some of those community members from our outreach perspective.
I would want to go a bit deeper
Yeah,
into
maybe just to amend here really quickly. I find it very interesting that Kyle like mentioned this need to actually go back to the old values. Like I love the OG vibes. Like where does a project start? And it was always very like interesting to see that in Web3 community is way more important to thrive than in Web2. But now in the last cycle, it was somehow lost, like very short-minded. It's kind of a bit TikTok age, 7-second attention span. And now the measure of paid network to kind of say, okay, let's democratize it again. Let's see who really buys into a project's vision and give them a chance to maybe be part over time. I'm not sure like where this economic model ends up, and probably we can't disclose like the full kind of value ladder, but I assume it goes into the direction, okay, you maybe have an idea now, but also alongside the next stages and milestones you as a community member can earn being part of it, can earn kind of upside by contributing to the success. And I think that's going to be super interesting to follow on the market, like which players are focusing on which audiences. I'm certainly sure there gotta be kind of these degen pads like trying to flip 10 eggs, trying to make it a quick money grab, and that probably is difficult for founders to sustain in. And on the other side, like people who learned maybe, okay, how are these market dynamics, and what's actually the result? Try to move back a bit and say, okay, we want to actually bring real economic value. That's our life here. We want to have an economy which works and which is not just a Ponzi living from new blood coming in who need to suffer to get their way up. So I really love what I'm hearing.
I just wanted to build on that example that Kyle gave of, let's say a private round is at 70 million and the public round we do at 50. And maybe it's a bit technical here, but at what valuation would you then suggest that the token gets listed at TGE? Because I can imagine that a private sale investor is not happy if it gets listed at the 50 million, and the other way around maybe as well.
It doesn't matter. Like the listing price never matters. It doesn't exist, right? Because for a microsecond, it might get listed at a price, but the only people that actually get to sell that token on the listing is market makers or the exchanges, right? Like nobody gets it. No, there's not one retail ever person that has ever got to
Mm.
participate at that rate, right? Never. Even if you add liquidity to DEX, it's snipers, it's people way more sophisticated than you are. So the listing price is relevant, right? It doesn't matter. Like the market will just the price discovery will happen, you know, 12 hours after a project launches or something, right? Then you'll kind of find where the market determines the price to be.
And then talking about 12 hours after the launch, like ever since the bear market happened, some launchpads started introducing refund policies. And this now became a standard in the launchpad space that launchpads offer refund policies to their communities. Do we have any thoughts on the refund policies? Is it a good? Is it bad? Is it a bit of both sides? Um,
And I think I'm happy to touch on that. I think it was something that, a lot of the launchpads introduced during the bear market in 2022 post FTX. But I think it's something that we definitely need to do away with. I think protecting the community interest is definitely very, very crucial. But I think for as a launchpad, we've always been very founder focused. And having these community protection policy goes against what investments is meant to be, right? I think investments, there's always a risk that comes with it. There's no guarantee when it comes to an investment. And I think we need to stand true to that. And I think more importantly, from the founding team or the founders that we're working with, they need to have an assurance that if we commit to raising X amount of capital for them, for their project on our platform, we need to ensure that we achieve that instead of, kind of help letting them know, oh, they've raised, 300K, 500K on our platform, only to see a big chunk of that being refunded. So I think a lot of education needs to go into the space. And I think for us as launchpads, we now need to ensure we're going to put quality over quantity and ensure that the projects, become, are deliverable. And I think for us in this cycle, we are also looking to do a lot more proprietary deals, right? Where it's projects that we're going to be investing more, not just doing it as one or many other launchpads, but being able to kind of guide them on a much more longer term basis is what we're looking for. And I think that's really where, we need to land a brand to say that we are backing this project up. We're assuring you we're going to do our level best, even if it's not a TGA. On the long term, we're going to work with the project to actually ensure it's going to be a success. And I think the community protection policies needs to be phased out progressively as we head into this bull market.
Yeah, we can't even do them unpaid, right? Like we're non-custodial, right? So we never take possession of user funds. It's our smart contracts are peer-to-peer, meaning that the project founders themselves initiate the contract, and that transaction we're never intermediaries. The only thing that we do, we built a autonomous smart contract framework that does crowd sales, and all that we do right now for now is it's permissioned, meaning that we say yay or nay who can come on the platform. In the future, I'd like to roll out a separate version of the website somewhere on another tab where it's permissionless and people can go do it on their own. And then we're just, we're thinking about ways to try to allow people to, give themselves more credibility. Maybe they can do their own KYC. Maybe they can link their social profiles. Maybe they can link their LinkedIn status, whatever. But for now, you know, I think refund policies are like the antithesis of what we're supposed to be doing in crypto, right? Like the number one thing is like be your own bake and take responsibility for your own actions, right? If you're a dumbass and you give your seed phrase to somebody and they take your money, you deserve it. Like you should have learned how to be responsible, right? And if you're going to come play in the space, then and you want to be an investor, then you have to also be willing to take risks. And if you lose your money, then it's your fault, right? It's not my fault. It's not Prakash's fault. It's no one's fault, but your own fault if you lose your money, right? And I think it's and this and like Prakash said, these founders need this money, right? Like for us, we normally, we're usually getting to projects like, and I have to go back and tell projects like, what do you mean you're only raising $200,000? Is that enough money for you guys? Is that enough runway? Like, what are you going to do? What the fuck are you talking about? You can't survive on that. No, 2000s, like the like good solid, like there's a lot of shit in 2017, a lot of scams. Let's for the sake of this conversation, let's pretend that those didn't happen. Let's focus on the guys who had quality, right? Or at least good intention, right? They raised a significant amount of capital selling not just 1, 2, 3% of supply, 30, 40, 50% of supply for 10, 20, 30, 40, 50, 60, 70, $80 million, right? And if you're building world-changing technology and you're one of the industry leaders with a kick-ass team who misses birthdays and Christmases and holidays and is staying up at night to try to deliver something that's going to change the world, I want to see as an investor, because I invest in every project that launches on Paid Network, I want to see that you have 4 years of runway in stablecoin in your treasury. That way you can survive and not have to sell your tokens into the market, right? Because I'm not only the Launchpad founder, I'm also a KOL, or as I make YouTube educational content, right? So how can I, in good faith, go tell my audience to go buy a token when I know that you're not properly funded and you're just dumping the tokens on the people that are buying them? It's fucked up, right? And so, like, I think that so they need to raise this money, and that's why we're trying to take all this effort to make sure that we've got great founders that have got product, right? Like actual product built, ready to go, launched, like they're going to be making revenue, and that they raise plenty of money. And so, I guess you did take a risk that maybe like it's always easy to say if the token goes down lower than the IDO price, that, oh, I could have just bought it in the open market without investing. Yeah, but maybe it didn't, right? Maybe it 3x on the launch and you missed out on that, right? And so we're not like I think it's just like it's actually I think it's pathetic to like for a refund policy. Like I think you're just putting a handicap on people and saying that you're too fucking stupid to figure out your own shit, right? And that you need your handheld, right? And so for me, I hate it. And I'll tell you this, like, we had a lot of pressure too, right? So I'm no longer, day to day operational at Paid Network. I am still the founder, and I work very closely with the executive team, and I make sure that they stay on course, right? And that I'm still the person who kind of sets the vision, sets the tone, economic policy, and our entire strategy. They came to me a while back and said, "Hey, we need a refund policy." I said, "No, we can't. We're not going to do it. Right? First, we can't take people's money. We can't custody it. Right? I don't want to be responsible for that. It's illegal, also. And then two, like, I just don't. It's not the responsible thing to do. Right? You're teaching people how to be that they can just like this is what banks do, right? Like, oh, let me hold your money and it's secure. I'll take care of it. And most people would prefer to keep their own crypto now versus hold them in banks. So that's my 2 cents on it.
Absolutely tremendous to see how you strive in this environment. I think we need more people like you who really understand like how to go along with this market, because if I think no one who's part of like two or more cycle wants to repeat again, right? Like since 2018 we're like all shouting for adoption, like where is adoption, like next year, and we're not getting there because I think a lot of those stakeholders don't put that thoughts and say like, okay, what is needed to make systems thrive? Like, like should we actually do like a launchpad conglomerate to take the first step? Say, hey, look, guys, we imply rules which make this environment more healthy. Like maybe not one alone cannot do it, but maybe you're a head who has enough charisma, like enough influence to say, okay, let's build it together. Like, let's change it. Like, even if there are legions who expect this 10x on day one with a refund, like, no, we don't do it. We agree. Like in all other industries, not Web3, there are certain conglomerates. They're speaking about rules. What makes the environment safe for the stakeholders who are building, who are offering their time and attention every day. But in Web3, we're still kind of in these children's like shoes and say, okay, let's just go with the flow. Let's embrace the wild one west. Like everyone likes to make money, which I agree. But yeah, when is the time coming? It's like maybe Prakash, you and Kyle both, like you have force, you have leverage. What can we do with this?
So when we started, I think, there was a very loose alliance that we had with guys like CDFI, Bullperks, and a couple of other launchpads. And I think we kind of designed it in a manner where it's protecting the communities that we are serving. There was a lot of deal flow that we were sharing. And each time there was also some bad actors in the ecosystem, we kind of sounded out each other. So I think kind of forming some form of alliance where we are kind of coming together to cooperate and collaborate, I think is very crucial. We've always been a very collaborative launchpad. We've also launched many other launchpads on our platform, and we'll continue to strive to do that. But I think some form of a cooperative based model where we are protecting ourselves, we're protecting the communities that we are serving, and we continue to grow the communities that we are serving is going to be very, very crucial. Because each time there is a scam or each time there's something bad that happens in the space, it hurts the entire industry, right? Whether we participated in it or whether we encouraged it, somehow or another, the impact always hits us. And in order for us to kind of continue bringing in new people, I think that's going to be very, very crucial. And I think we'll have to see if there's something that we can do together. And Kyle, if you have ideas, we'll have to support you on that.
Do you think that the earlier mentioned, like when a public round would be below the private sale rounds in the tokenomics, do you think this goes hand in hand with this refund policy? Let's say if there's no refund policy, then the team is actually certain that they get the capital raised from the public round. So they're happy to make that round at a lower valuation. While now with refund policies, they have to increase that valuation or that round because there's a chance that 50% gets refunded. Do you think this goes hand in hand, or is this something completely separate?
I think it was kind of something that got forced on and then it became a standard. And then if you don't implement it, you lose out, right? But I think in this market, the stronger projects will start to write that narrative. And I think this is the kind of projects that we need to look for. But I really like what Carl's building because I think that really shows how we are working very hard or how Carl's working really hard with the founders to show them the value of what a launchpad could do. We've been in discussions with a couple of projects where they are looking to kind of unlock some of the VC allocations. And instead of allowing that to actually go straight into the open market. We're trying to secure some of these allocations, allow the VCs to actually have some liquidity, but at least doing it in a very contained manner, and kind of doing it in a way where it actually doesn't hurt the token price. Yet we are able to bring value back to the community. I think the key really is that we now need to be able to negotiate and get better value for our community. And otherwise we'll say, look, this is not good for our community. Why drain liquidity out? Let's wait. Let's wait it out till another quality project comes in.
Kyle, do you think there's too many launchpads these days?
I mean, you know, every time that cannabis gets legalized in a country, too many dispensaries open up, and then most of them go out of business because it's Darwinism, survival of the fittest, and so I think that's going to happen in the space, right? And you know, for us, it's really about long term vision, right? Like I would like, I want paid to be infrastructure that people can trust, right? And that it's synonymous with high quality projects. Think of something like Coinlist, but with a true Web3 DNA. Coinlist is centralized. And that's another thing too, is that a lot of people don't realize that like Coinlist is not a Web3 company, right? It's a Web2 company. It's a centralized for profit company that does crowd sales. It's like Kickstarter, right? And so they have no, it's not a Web3 company, and that's okay, right? But the difference is that I believe, that when you can build a really vibrant community. Like paid now has an affiliate model built in, right? And so anyone can go refer people and make good money. And so and then all of the revenue all the revenue generated from paid goes back to token holders, right? And so I think that when you use economic incentive to build community, right? That's how things go viral. And so I think that's how we beat someone like a Coinlist in the long run. We focus on quality, and when people look back at everything that we launched in the 2024 and 2025, bull run, most of these things will survive. I believe that we might not if you look at crypto rank or something, that we're probably not going to be ranking up there on the all-time high multiples, right? But I think that when you look at something like that, that's tracking success of ROI, current ROI, in 6 years from now, I think that we're amongst the best, right? And that's my goal, right? And so I want people to be able to have the confidence that aren't looking for, to like the kind of manic behavior and the idea that getting rich quick is possible, right? Because so many people in 2017 got rich quick, but they lost it just as fast, right? Do you know how many like Lambos got repossessed? When the 2017 bull market crashed, right? So people round trip these things all the time because they don't know how to invest. They're not smart. They never take the time to learn how to invest properly. And so if you're just chasing a dopamine hit, you're going to experience what it feels like to make a lot of money, and you're likely going to lose it just as fast, right? And you saw that happen. Like literally, we had a mini bull market in Q3. Well, sorry, Q3, Q4 of last year, Q1 this year, right? Like we had a little mini. Like my YouTube views went way up. Retail was coming back in the market. Coinbase app was climbing the ranks. It felt like a bull market, and all these people were excited. Everyone's making money, and then everyone lost money again because market corrected. We had a little mini crash, and we've been down since then. And everyone felt like what it's like to get rich really quick. And so people need to learn, and that's what I try to do on my channel, is educate people on like, you need to learn how to be an investor, right? Not a flipper, not a value extractor, an investor, a smart money investor. Take your time, you do due diligence, make your own decisions, and be a good capital allocator, allocate toward sound quality projects. And I think that, as like we have two platforms, right? Like Commonwealth focuses on very early stage and managed types of investments. It's a decentralized fund essentially, where it's stable coin in, stable coin out. Whereas things like Enjinstarter and Paid Network, let the people manage their tokens for themselves. And some people prefer that. Some people prefer the managed fund method. But I think that both of these kind of platforms offer superior uh, risk minimized investment opportunities into the crypto space versus just gambling on the open market. And I know that if you ask most people today, Everyone says, why would I go invest? Like it's so crazy. So everyone's like, why would I go invest in this awesome private sale right now when I can just go buy a meme coin and do 100x? Good fucking luck. Go try to buy a meme coin and go to 100x. Do you know that like 0.00034% or something like that are even making it to like a $50 million market cap or something? So the chances of you actually, unless you're a super insider, right? And there's like, if you're the 0.00001% of people in the world that get all the alpha, you're the Ansem or the whatever that someone wants, you to pump their shit coin. You're not making it in that world, right? But people are just seeing all of these posts and this whole the problem with the space is it's full of smoke and mirrors and bullshit, right? Like, how can I if I go to an X account, I see that you have 500,000 people following you and I've never heard of you, and my job is to have my finger on the pulse in the crypto market, to look at all new projects. I'm doing daily 5 days a week reporting on my YouTube channel about what's going on in the market, mind share, narrative. But I've never heard of you, but you have 500,000 people. I'm like, bullshit. Get the fuck out of here. Like there's not even any retail in the market. There's no way you have 500,000 people following you. We only have 130,000 on paid. I've been working my ass off on X for years and I only have 213,000 followers. There's no way your shitty project that's vaporware has 500,000 followers. You're full of shit, right? And unfortunately, the space this is the whole thing. Exchanges are like, how many people do you have in your Telegram? How many people do you have in your X?
Sure.
It's fucking
Yeah, it's still
bullshit.
there, right? Like it's like, when does this change? Like I don't know how it can change, but it feels like it must, to actually
Hate it.
achieve this goal, to build something which stays here for decades. And I'm so glad to hear this from your voice, because I think you really touch a lot of people, right? And if it, the more we actually elaborate around this topic and say, hey guys, like let's be honest, like who wants bots? Like who needs to compete with bot engagement? Like why there is like mushroom businesses popping out of the floor, like boosting your X engagement? Like you can pay to get people on your AMAs and ask questions. It's a common practice, but like what value is it? Like who does it
It's
help? I don't get it.
It's because people don't really want to fucking build something. They want to make money, right? And they're literally value extracting. They're building centralized companies that they want to make money and take it from you, right? They want to take your fucking money. And this is the thing. If someone sells you a token and that token doesn't have real utility, real value accrual, real economic design, they're trying to steal from you, right? And most people don't understand that. But the fact is that they couldn't raise money in the equity world because they have fucking vaporware. They don't have anything, right? So what they do is you go, why do you have a token? Oh, because it's easier to raise money that way. You're a scam. Go away. Don't talk to me, right? And so this is the whole space. And so if your entire goal is to get listed on a tier one exchange because you want to have high volume on day one, so you can literally dump your fucking tokens all over retail on day one and extract $25 million and leave, which is what most people do, right? They try to get as big a hype as possible. They spend a bunch of money in marketing, all the KOLs, buy this token, no circulating supply, give the market makers, all the big ones, a bunch of money, a bunch of tokens, and then literally on a tier one exchange, tons of hype, dump everything, walk away, $25, $50 million in their pocket, and they're done. That's it. The product never gets built, right? The product never gets built. They never really intended to do it because it's too hard to do it. It's too hard to actually go and build something useful. It's too hard to be a proper, real founder to do this, right? And so this space is just full of people sucking value out of everyone else, and it's disgusting. Right? And like, so, real founders, if a tier one exchange wants to list them, great, and they don't, and they know intrinsically there's something wrong with botting their X account, right? I love speaking to founders that have awesome projects that have 14,000, 20,000 followers and if they're awesome projects, right? Like awesome. And that's organic, right? They said, no, we didn't bot shit. We didn't, this is just a real community that we've grown over a year or two. And like, then I know that there's actually real people. And there's not some airdrop for you to go click some buttons or tap a screen. Like, what the hell is this? Right? Like, you can't do that. It's just a big show and everyone buys it. Everyone buys into it. And it's really toxic. So when you go back, Rick, and you talk about like, or like, all right, like when you talk about us maturing as a space, you know, we have to actually build real things that are useful for people. Otherwise, we're just gonna be looked at as a big laughing stock, right? Like, and we need to start building really useful things. And so, I'm really excited to be working with a lot of great founders right now who are building really great things. And, we want to see their products before we launch them. We want to try them out. We want to play with them. We want to test them. And I want to look at your code. I want to see if you've got something built. And I want to know why you're building this thing, right? What's your number one motivation? What's your reason for doing this? Is it to make money? If it is, like, we probably shouldn't be, like, that's a byproduct of it, right? And you should only become rich if your token holders become rich because you built something useful and you've got adoption in that ecosystem and
Do
you've got
you
revenue that goes back to the token.
do you see Pump.fun as a great product or a great thing, or is it that more
It's a
facilitating
centralized.
the bad?
No, I mean, like, I think that they're like, at least they're not trying to be a Web3 company, right? I mean, it'd be like, at least they're not trying to do that, right? They saw an opportunity. There's nothing wrong with capitalism. If you build a centralized company and you build a product that someone wants to use, and there's a market for it, it's fine, right? But I think it's funny that people compare it like as a web, like, why are you comparing pump funds revenue to Ethereum? I just saw a tweet the other day saying, look, it's doing more of a, who fucking cares? It doesn't matter. It's not like it's a Web3 company. It's not a Web3 company. It's a centralized company that literally all that profit goes back to the couple founders that founded the thing, And so I don't know why people talk about it so much. Like, it's popular, but like, literally, it's just taking everybody's Solana, right?
Yeah,
Everybody, they're making like 500,000 Solana a day. And how much of that is actually being going back into something useful? None, right? It's just like, literally, just people are just giving them their Solana to do this whole thing, right? And so I think that there was a great, as a founder, if they've got investors, an amazing business, and people who are willing to pay them for the service, that's their choice, you know. So, but it's not a Web3 company. And it shouldn't be looked at as such.
okay. Yeah, we are coming close to our end mark.
No, but,
Before
but imagine all they have to do. They could completely decentralize that whole thing, right? They can decentralize the entire thing. I mean, it already is essentially automated. So all they have to do is remove themselves as equity shareholders, create a token, use the revenue to buy back and burn or redistribute to governance holders or whatever, and they would be a top 10 token because they're producing more revenue. They would be like a multi-billion dollar. But instead of sharing that value with the community, they decided to keep it for themselves, right? And that's the difference between like a Web3 company and centralized company. And that's a decision that they made.
That's actually a great point. That's true. They could, but they might be greedy, and maybe it's yeah, a good thing how much money they're printing right now. Good for their own pockets. We're coming up close to the end of the episode. I just want to ask one last question, which is, what are we excited about, except from like the catalysts coming up in the more macro sphere? But like, what are we excited about within the crypto space, or what we are working on ourselves? Prakash, maybe you can start.
Wow. I think it has been a couple of tough months for us, but this is where we've done a lot of alignment. I think what we're really excited about is how the Asian market is going to come in a big way for this particular cycle. I think that's something they will continue to build upon. And I think that's something that we are very, very excited about. And I think really kind of, working with some of these high quality projects that have actually built over the last couple of years with sizable communities, revenue generating, and now being able to help them further expand their distribution is definitely one of the key areas that we're looking at. I will continue to hunt wherever and whatever that it takes to actually bring these projects to our launchpad.
All right. Thank you. And Kyle, how about you?
I'm excited for account abstraction and, like, really abstracting it. Like, I'm excited for the way that we have decided to build in a way where we could accommodate for certain use cases, right? If all you need to do is, use in-game assets that are, 10, 20, $30, $1, like, that's not a lot of value to be storing on chain. You don't need total security. If you abstract away the account and you make it so that the protocol can actually sign transactions on your behalf, yes, it's less secure, but like, you also, if you got hacked on that, like, it's not the end of the world, right? You lost like some in-game assets or something. It's like, and it's still quite low risk of that happening. It's more likely to happen because it's, centralized thing at that point. But the point is that, soon, probably in the next couple of years, most people will be using blockchain and it will feel like a normal app. For the use cases where that's warranted, let's say a social network, for example, right? You get a good decentralized social network and you want to tip people, a couple cents, a couple bucks, whatever. You're never going to load more than like 50, $100 in that account, right? You're not going to load $20,000 in there. So that can be cheap and fast, and you can have account abstraction on that, and you can allow, the service provider to sign on your behalf so that you don't have to sign every time you want to send someone a tip or something like that. And so, but there are certain use cases, of course, where you do need to be self custody, you do need to control, and you do need to be responsible for your big money, DeFi products, cold storage, things like that. So I think it's exciting that soon people will be able to onboard in ways that feels more comfortable for them. Something that we're focused on trying to implement now, but not just us. Like, I think that's a really important thing for the space, as well as interoperability, right? And so you have, a lot of really cool interoperability protocols, and like the future of blockchain means that all the chains are abstracted away in the back end, right? Like you won't even know which chain your app is running on. Like and it can just seamlessly hop and communicate back and forth between Solana and Arbitrum and Base and Meg ETH or whatever, right? And so like abstracting away the blockchain, like, because think about all the other infrastructure in the world, like TCP, bridges, the foundation of your house. Like, do you check the integrity of any of the infrastructure that you use on a day-to-day basis? No, it just works. It's just there in the background, right? And so blockchain is infrastructure. It's supposed to be the thing that we rely on for security and transparency and a ledger, but like we shouldn't really have to interact with it directly on a day-to-day basis in a way that's intrusive, unless we rely deeply on the security of that transaction. In that case, then we should, right? So I think that, to me, like, because this is the path to adoption. And people are wondering, like, the biggest thing has always been like, oh yeah, well, if crypto is going to be such a big deal and blockchain is going to be a big deal, then like, why isn't it been widely adopted yet? Well, we're not there yet. We're a nascent industry. Like, if smart contracts only became around in 2015 and hardly 2015, right? Like, but so, AI has been around for 40 years, and it just had its aha moment, beginning of last year or whatever, right? 2020, whatever it was, when ChatGPT launched. It took that long for them to finally get it into the consumer's hands, that were something that could be useful for them. We're moving at a better pace than that. So for me, I'm looking forward to, like, when people can really truly understand the value of an open, permissionless, censorship resistant, peer to peer, immutable protocol, DApp, or infrastructure, where they see the value of removing middlemen from that transaction because it's more efficient, right? I believe that everything that can be decentralized will be. It's just a matter of having the user experience needs to be there. And it's not quite there, right? If you could get from your house to the airport in a ride sharing app, and you didn't have to pay Uber their fee, the driver would make more money and the passenger would pay less money for the exact same experience. And they would use that thing every single time. Right. And so I think, like, I'm a decentralization kind of maxi. And I think that most people aren't building with this mindset, right? They're building, and when I talk to people who are building what they call Web 2.5, Web 2.5 applications, I'm going, guys, like, you're really smart founders. Like, you're building a really cool product, but you have this equity model and you have this token model and you have this revenue that kind of goes to shareholders and goes to token holders. And what I'm afraid, if I write a check, if I invest into you guys, I'm afraid that somebody who does it better, that actually decentralizes thing and actually sends all value accrual back to the token, is going to disrupt you, because you're trying to disrupt the incumbents, but you're not building a moat around yourself. You're making yourself vulnerable for disruption from someone who does it better. Right? And I think so. Hopefully this stuff catches on, but unfortunately, most people just want to make 50x on some shitcoin. So, but hopefully, more people start focusing on like the quality things, and that's what I'm trying to do.
Okay, thank you very much. Thank you very much for your time, guys. I think what I take away from this episode is definitely account abstraction that we're looking forward. We're looking forward to that, but also the good things we can take away of the 2017 ICOs, which is, for example, the valuations of Ethereum, Chainlink. We got to go back to this, and that refund policies are actually not great and not helping the space forward. I appreciate your time, Kyle. Appreciate your time, Prakash and Godly,
Sure.
as every week. Thank you very much. Yeah, see you next
Thanks,
week.
Thanks, Prakash, Godly. See you guys.
Thanks, guys.
Uh,
Was a big
Enjoy,
pleasure.
buddy.